There's a new article.
Mm-hmm.
This piece, it's a headline from GlobeSt. Experts warn housing could be the tipping point for the next recession. And so, this is kind of on this topic that we've talked about a lot over the last several years. And we were talking about right before the show, the correlation between rents and home prices. And, the question you wrote at the top here is, are home prices going to spiral downwards and crash the economy? And also connecting that to rents. But there's a lot of concern because obviously our interest rates are incredibly high.
Mm-hmm.
We ask the question all the time, who can afford to buy some of these homes, or who's willing to send out that down payment,
Yeah.
pay that mortgage? And there's been so little inventory that's come on the market that there have been enough buyers out there that are willing to purchase at this price that home prices have been surprisingly stable, even grown over the last several years, despite the conventional wisdom that, hey, interest rates, spike up a couple percentage points, prices of real estate should go down. I mean, that makes a lot of sense. What are your thoughts, and what's the thoughts of the folks at GlobeSt that wrote this article?
You're right. So home prices have been, and we'll see from this report from Cotality that shows home prices increasing about 2% year over year. However, the cost of home ownership is increasing a lot more, and I think it's because a bulk of that is interest rates that have just remained that pressure. So if you get this home price, if it doesn't shrink, and you also get higher interest rates, then that cost that's going to be passed on to consumers is a lot more. To those that have a mortgage. This is I think a particularly spicy take from this GlobeSt article. Now, tracing it back, it took a little sleuthing. It called it. It said this is based on someone from Citigroup Research, but it's an arm of Citigroup, and they rarely call it Citigroup Research. It's actually based on an article that Fortune wrote. So I was doing some sleuthing. It's
a little derivative, Trying to get to the final source.
Regardless, we found the source, and we and expect some softness. They say Citigroup says it is in the housing market. Q2 could end up being worse than Q1 when it comes to home sales, and the popular home buying season is early spring. Late spring, like spring and early summer, and that's Q2. And so if this is the peak home buying season and it's going to be softer, that does not bode well for home prices.
Let me ask you a question. Similar to multifamily, talking about rents or real estate on the national level can be illustrative and can be useful for some purposes, for macro analysis, how's the U.S. economy doing, things like that. But when we get down to it, different regions, different states, different, MSAs, then, different submarkets can be behaving very differently. And, I'm thinking like a market like Florida as a specific example that is dealing with, on one hand, a lot of people have been moving to Florida. So there's a lot of population growth and all of those good demographic story. But prices have come up a lot in Florida. Half New York moved there during COVID, it seems like. But then you also had that like Surfside condo collapse a couple years ago, and that has brought on this onslaught of all these condo associations issuing basically special assessments because they're basically finding out that they have a ton of deferred maintenance, and so all these condo owners are getting hit by these massive special assessments. And good luck selling a condo in Florida when you not only have this high HOA. You've got this story of a whole condo falling down, and then if you're going to buy it, you got this extra cost of paying up.
I know that we're not supposed to be speaking well of regulations, but I want some regulations that help the condo not fall down. I
think that maybe there have been some regulations. I just don't think that they were following.
That's a good point. But like when some people I think it's going to make it tougher to build apartments in places like Miami or these sandy beach locations that are in the paths of hurricanes. It's going to make it harder, but probably deservedly so. I mean, I'm sure that.
Well, it's made. I mean, the insurance is driving a lot of that. Whether it. The building codes are pretty high in Florida. They've been for a decent while longer, but now the insurance has gone up so much. Especially the wind insurance for Florida and other coastal areas that, again, take the condo piece out of it and the special assessments, on a regular single family home, you're paying a significant amount of insurance because of
Yeah,
the
yeah.
for,
Oh, I
for a
remember when we
hurricane.
talked about that. We were like, it could be just to the point where you're buying a new house every year if insurance is that much.
Basically, insurance doesn't really cover anything. You have to pay a ton for it, and
Yeah,
you're almost better off self-insuring. But
yeah,
not very many people can afford to actually self-insure.
yeah.
Get a mortgage requires insurance, and they're not necessarily just going to let you self-insure. If you do, it has to be really significant, if at all.
Yeah.
So, getting back to just there's regional differences, and we see regional differences in rent also
Yeah.
because there was certain behavior of overbuilding in certain areas that had strong population growth. Now there's a glut of supply. The similar dynamics are going on, in the single family home development side.
Yeah.
There's a ton of single family home subdivisions that have been built in the Sun Belt. And so there's going to be more supply in those markets than they're going to be in, the Midwest or the Northeast.
Yeah.
Anecdotal example, I have a family member that recently went to sell her house, and it's in a price range that you'd consider a starter home, like kind of in the sub $500,000 range. It's in kind of not like urban, but I wouldn't call it suburban either. It's kind of in the broader pool.
Okay.
They were not
Got
too
it.
far from where you live and I live. And you can't really it's hard to find a house in that neighborhood.
Oh, yeah, yeah.
And that's why a lot of people have to go to the suburbs if they want to buy something. She had it accept an offer within 2 days, and then went $50,000 over asking price, bidding war within the first 48 hours.
Yeah.
Now again, it was a 2-bed or 2-bath, 2-bed in a market where there's usually only one bathroom, so it kind of stood out a little bit.
Yeah.
But there was clearly some demand, and we're seeing still some activity.
General area where she was looking, Broad Ripple area?
Yeah, Broad Ripple.
Yeah.
Well, I won't give all
Yeah,
exactly.
yeah, I know. That's why I said
there's-
general.
But yeah, kind of Broad Ripple area. Good spot to be, kind of near Shatara.
Yeah, yeah.
And so you're seeing some price growth in the Midwest still, and because the housing stock is more affordable relative to some of those markets still.
Yeah.
You still have to pay a decent amount in interest, but if you look at some of the affordability charts that we've looked at, comparing rents to your mortgage payment, those Midwestern markets and markets in the Northeast, some you do have some really high prices in the Northeast, like New York City or Boston.
Yeah.
But like in the Midwest specifically, there's not nearly as large of a spread. There still is a spread between renting and owning a home, the mortgage payment you're going to pay. So it would make. So what I'm getting at is, what are some of these regional differences, and how much weight should we just put on, like, the nation is seeing some slowdown?
It's funny that you mentioned that just before we talk about like more regional ones, but dialing even down to like the submarket and some of the properties that we look at, are there nice homes around it, and like that's a bonus, and you can't tell me that that you don't look at the neighborhood, and like that's a factor, right? Are the home prices in there high? Are they low? That indicates that people want to live here and how much money they're willing to spend on housing in this area. So I think it's incredibly relevant when you're like looking at an individual apartment to buy, but also if you're assessing the performance of a market or of a region. And no surprise here, at least to us, I was very gratified to find that the same patterns that we're finding with rent growth are present in the home buying market.